I'm sure you must have seen this headline which says that Fitch affirms Fidelity Bank's issuer rating at B and then upgraded its national long-term rating to an A+. First of all, who is this Fitch and what is this rating that they are dishing out? As you already know, this is Make Finance Simple. And in this video, I'm going to explain what Fitch is, what these ratings are, and why they matter. Fitch Ratings is one of the top credit rating agencies we have in the world. And what these credit rating agencies do is that they assess a company or a government and determine the creditworthiness of that company or government. That is, they assess the company and determine if that company can fulfill its financial obligations, or simply put, if that company can pay back its debts. So after this assessment, they then assign a rating or a grade to the company in question. The essence of doing this is so that they can help investors understand the level of risk they are getting into if they want to either invest in that company or even give loans to that company. These ratings come in different forms depending on the rating agency. For example, for Fitch, the grades run from triple A, double A, single A, triple B, and so on down to D. And then along the lines, there could be a plus or minus, like an A plus, A minus, B plus, B minus, and so on. And for Fitch, ratings that are between triple A and triple B are known as investment grade rates. So companies that have rates that are within this range are known as investment grade companies. So what this means is that these companies are seen to be more credit worthy, at least compared to others, and their default risk is low. However, credit ratings that are from double B down to D are known as speculative ratings. So companies that are in this category are seen to be less credit worthy and they are less likely to fulfill their financial obligations. So in summary, their credit or their default risk is high. So now you've understood what Fitch is and what these ratings are. Let's get back to Fidelity. So what the headline says is that Fitch affirms Fidelity Bank's long-term issuer default rating at B. This is the first part. What this first part means is that for this category, which is the issuer's long-term issuer's default rating category, the rating agency has reassessed Fidelity Bank and they've confirmed that the bank should remain at a B for this category, which was where it was. However, for another category, which is the national long-term rating category, the rating agency has upgraded Fidelity Bank from an ordinary A to an A plus. So this second category in question, the national long-term rating, is a category that assesses the default level of a company relative to other companies that are in the same country as that company. So what this means is that with Fidelity Bank having an A plus in this category, its default risk is low compared to other companies that are in Nigeria. So in a nutshell, we can say that Fidelity Bank is a strong company credit-wise if you are comparing it with other companies in Nigeria. The main factor that influenced this ratings upgrade for Fidelity Bank is the fact that the company recently expanded its capital base. So if you remember from last year, CBN mandated or increased the minimum capital requirements for commercial banks to 500 billion naira. So what this means is that all commercial banks in Nigeria are expected to have an equity value of at least 500 billion naira by the end of 2025. So because of this, Fidelity Bank was forced to raise capital, and this was what they did when they issued shares last year so that they can comply with these requirements. So this their capital base increase and the fact that the company has been performing well in recent years are the two key drivers that influence this ratings upgrade that they got from Fitch Ratings. But then the big question is, why should we even care about this whole virtual rating that is assigned to a Nigerian company by a foreign company? Credit ratings are actually very important because they help investors and lenders determine the creditworthiness of a company if they are willing to either invest in that company or even give loans to that company. And they also use it to determine how much interest they'll have to charge a company if the company is willing to take a loan. So companies that are in the investment grade category, that is for Fitch, companies that are from triple A to triple B, they usually have low interest charges or low interest costs if they want to take loans from investors. However, companies that are in the speculative grade, that is from double B down to D, they usually have high interest charges because their default risk is high. And the added advantage of being in the investment grade is that you can easily attract foreign investors, which will help the long-term growth of the company. But you should bear in mind that these ratings or the grades that are assigned by these credit rating agencies, they are only recommendations. They depend on whatever factors these agencies have factored into their analysis. So they should not answer a specific question on whether you should invest or not invest in a company. They are just recommendations. Now you know the gist about Fidelity Bank and the Fitch ratings. Let me know in the comments your thoughts. Don't forget to like and share this video. Follow for more finance made simple, and I'll see you in the next one.